The world changed hands in 2022. For the first time in years, it was not a tech giant at the top of global capitalism. It was oil, and for a brief, unsettling moment, Silicon Valley lost its crown. In May 2022, Saudi Aramco became the most valuable company on Earth. It passed Apple. It overtook Microsoft. The world's most powerful corporation was no longer built on software, chips, or smartphones. It was built on crude oil pulled from the ground. And that shift revealed something deeper about power in the modern world. But to understand why oil briefly won, you have to rewind to the peak of the tech era. In 2021, Silicon Valley felt unstoppable. Apple was worth nearly $3 trillion. Microsoft was dominating cloud computing. The pandemic had accelerated digital life, remote work, streaming, e-commerce, AI research. Everything pointed in one direction. Technology was not just an industry, it was the infrastructure of the future. Investors believed software would eat the world. Then inflation arrived, supply chains broke, energy prices surged. Central banks raised interest rates aggressively. Suddenly, money was no longer cheap. And when money is not cheap, the future becomes less valuable than the present. That was the first crack in Silicon Valley's dominance. Growth stocks, especially tech, are priced on expectations. They are valued based on profits that might arrive 5 or 10 years from now. When interest rates rise, those distant profits become less attractive. Valuations compress, prices fall, and tech stocks fell hard in 2022. But at the same time, something else was happening. Russia invaded Ukraine. Energy markets panicked. Oil and gas prices surged. Brent crude shot above $120 per barrel. Governments scrambled to secure supply. Europe rushed to replace Russian energy. Fossil fuels, which had been politically unpopular only months earlier, became strategically vital overnight. Energy was no longer just an industry, it was security. That is when Saudi Aramco surged. Aramco was already massive. It controls some of the largest oil reserves in the world. It operates at incredibly low production costs. When oil prices rise, its profit margins explode, and in 2022, they did. The company reported record earnings. Cash flow flooded in. Dividends soared. Investors who had ignored energy for years suddenly rediscovered it. In May 2022, Aramco's market capitalization climbed to roughly $2.4 to $2.5 trillion. At the same time, Apple's valuation slipped below that level as tech stocks corrected. Microsoft also declined sharply from its highs. For a brief window, oil was king. That moment carried enormous symbolic weight. For more than a decade, the story had been about digital transformation. Software platforms dominated headlines. Silicon Valley defined innovation. Oil was described as legacy, declining, even obsolete in a net zero future. And yet, when the world entered crisis, it was energy that determined stability. This was the first small hook in the story. When uncertainty rises, the physical world reasserts itself. Oil powers transportation. It fuels militaries. It heats homes. It underpins supply chains. Digital systems may coordinate the economy, but energy powers it. In 2022, investors remembered that. But here is the second twist. Aramco's dominance was not just about oil prices, it was about resilience. While tech valuations relied on expectations of continuous growth, Aramco's profits were immediate and tangible. Every barrel sold translated directly into cash. There was no dependency on advertising demand or smartphone upgrade cycles. There was no need for speculative AI projections. It was raw commodity economics. For a few months, the market rewarded certainty over vision. Yet this was not the end of Silicon Valley. By late 2022 and into 2023, another force emerged. Artificial intelligence accelerated dramatically. NVIDIA became the backbone of AI infrastructure. Microsoft invested heavily in AI partnerships and cloud integration. Apple maintained its ecosystem dominance and financial strength. The narrative shifted again. Investors began to price in the next wave of technological transformation. AI was not just a feature, it was positioned as the next computing platform. Cloud revenue remained strong. Software margins remained attractive. The structural logic of digital platforms had not disappeared. Oil had won the moment. Tech would reclaim the trajectory. By 2024 and 2025, technology companies once again occupied the top ranks of global market capitalization. Nvidia's valuation surged beyond previous records. Microsoft and Apple stabilized and expanded. The AI boom reshaped expectations. Aramco remained enormous, but it was no longer alone at the summit. So what actually happened in 2022? It was not the fall of Silicon Valley. It was not the permanent return of fossil dominance. It was a reminder of structural layers in the global economy. At the top layer, we see apps, devices, and digital platforms. Beneath that layer lies infrastructure, data centers, semiconductor fabrication, cloud networks. And beneath even that, there is energy. Without power, none of the digital layers function. When geopolitical shock disrupted the system, the market briefly repriced that foundation. Here's the deeper hook. Modern capitalism appears digital, but it is still anchored in physical resources. Aramco's rise to number one forced investors to confront that reality. In times of abundance and low interest rates, markets reward long-term innovation. In times of scarcity and instability, markets reward essential supply. The crown moves. In 2021, the future felt predictable and digital. In 2022, the present became urgent and physical. There is another subtle dimension to this shift. Technology companies thrive in environments of globalization. They scale across borders with minimal friction. Energy, however, is deeply tied to geopolitics. Oil production depends on territory, alliances, and military stability. When geopolitical fragmentation increases, resource control becomes more valuable. Aramco's brief reign was not only about price, it was about strategic leverage. And yet, over the long arc of capital markets, innovation continues to command premium valuations. The reason is simple. Technology compounds, platforms expand, software scales globally at marginal cost. Energy, while essential, is constrained by extraction and reserves. The market constantly balances immediacy against scalability. That tension is the real story. In 2022, the pendulum swung toward immediacy. The world needed energy security more than it needed speculative growth. Investors reweighted risk, valuations adjusted. But by 2023, as interest rates stabilized and AI enthusiasm intensified, the pendulum began to swing back. Oil had reminded Silicon Valley of its foundation. Silicon Valley reminded oil of its ceiling. For creators and analysts, the lesson is not about picking sides. It is about understanding cycles. Capital flows are not ideological. They respond to conditions. Crisis elevates commodities. Stability and expansion elevate innovation. The world's most valuable company is often a mirror of the world's deepest anxiety. In 2022, anxiety centered on energy shortages and geopolitical instability. In 2024 and beyond, anxiety shifted toward AI dominance and technological acceleration. Different fears, different leaders. So when Aramco passed Apple, it was not simply a ranking change, it was a signal that beneath every digital revolution lies a physical dependency, a signal that markets can rotate violently when fundamentals shift, and a signal that dominance in capitalism is never permanent. The crown is not owned, it is rented, and in 2022, oil collected the rent. But the story does not end with who was first. It ends with a question. If the next global shock is not about energy, but about computation, data, or AI infrastructure, which foundation will the market suddenly rediscover? Because history suggests one thing clearly: power always sits on something deeper, and when that deeper layer cracks, the crown moves again.